Hey everyone, we just had OpEx and had a ton of prints at the close on Friday. And the last time that happened was quarterly OpEx in December. I thought it was huge at the time, but little did I know that what would be coming this quarter, and it was absolutely unbelievable. I'll show a couple. I'll just scroll through stuff. So this is by trade and size. You can pause the video if you see a name you like. I'll just scroll a bit. I won't all go into a couple of names, not all of them. So this is one page by size. Then we have by print, and way too many to do something with it. And we had over 100 prints, like 120, 130 number one prints, uh, over to 250 top five prints. And this is by cluster. So this is cluster meaning multiple trades in the same price range. For example, let's look at the number one. Number one was Dash, and the single biggest trade was 7.36 billion. But as a cluster, meaning all the trades that happened very close to this price, there was 11.8 billion. And I'll scroll a bit down to. You can pause the video if you see something you like. This is by price, and this is cluster by rank. So a lot of rank one clusters. Now, I went through all of this. I picked a couple of names. It it's hard when you get this much data. It's hard not to pick a lot, but this will be more like a live stream video where I make shit up live as I go. I prepare some things as well, like some thoughts in advance, but you will basically get a live analysis of what I see and the thought process. Now, why is this powerful? First, this is the list of tickers from the video I made in December. Like I said, in December at OpEx, this is December 20th. You can see it here. So December 20th, we had a bunch of prints as well, and these are the ones I selected. Sorry. And what I thought about them. So, for example, this was Apple, and the way you should think about this is it's not an absolute, but more like this area where the print happened will act as resistance. And I thought Apple would be. This is what I thought would be underperformance relative to market, and went a bit above, briefly above, and then it went below this print. Meta, this was the print, December 20th. And for Meta, it was support. I thought it was perform, but it went up a lot. And now, lo and behold, it's acting as support. So we dropped all the way back to this print, but for now it's acting as support and will likely go up from here. Microsoft, it was here, popped above briefly, but quickly got rejected, and it's been downhill ever since. Google, I think I deleted it, but December 20th is not difficult to put back. It was here. So again, it hovered above quite a bit, but once it went below in force and it was downhill ever since. Broadcom, similar to Google, hovered above a bit, but then it went down. Walmart hovered around it for a while and then it went up. Amazon, something different. Well, not all of them are perfect, but you will see a couple of great examples. Like for example, this one was Bill. And again hovered around it, but eventually broke down horribly. For Cisco, it was bullish, like it became support. Now we pull back, but we haven't even gotten to it, and it's still hovering there. Workday, it became resistance, and it's been trying to get above ever since. Alab had a ton of distribution here, and once all that distribution realized, it broke down horribly. For app, hovered around it. I still think this is a deviation, like meaning an abnormal behavior. This shouldn't have happened. More likely, it should have been like this, but that earning reaction made this something different. I think this will become resistance area in the future. Like when it gets to it, it will become resistance, and it will still go lower. MicroStrategy, same kind of behavior. Like it went briefly above and then went below. Also, very likely that this is resistance in the future. Uh, Apple thought it was resistance, and again, it became resistance and broke down. Nvidia, it's here, hovered above a bit. Also expect to be resistance in the future. It was an interesting one for oil names, energy names. Like I thought it was a bottom. Uh, Also quite a bit, but it became support, and finally we went up above it. But SOM is a special case. Like it's super obvious for things like CVX, Devon, like it was here and it went up. Clock was a bit, thought it was support as well, and it went up. AMD thought it was support, but AMD has been super fucking weak, incredibly weak. And I think this is the target as well. If we go up, like I wouldn't hold AMD past this point. I think it will become resistance. AMD didn't have a good print either this time around. SMCY, it was here and it was virtually support and it went up. Adobe, I don't remember where it was. Let's see, December 20th here. And I thought this was a bottom, but it wasn't. Like it became resistance. Uh, let's find a couple of more. CLF and Nui, I have Nui here. No, but thought it would be support because a bottom and it went up, but pulled back afterwards. But initial thought was good. Uh, let's find. There were some great ones like Guild. Uh, Thought it might be a top. It wasn't. We had another leg up. Coke thought it was support. We went a bit lower, but then it proved to be a support, and so on. You get the idea with this kind of things. So they're very very important, these prints, and Tesla one went up a bit, then it became resistance and dumped ever since. You get the idea. Now coming back to this quarter sprints. Uh, This is what I selected. Some of them I will discard as we look at them because they're not that interesting. But the biggest one that I like a lot is Target. And I have here the date range since the last print. So this is December 20th and until this Friday. Target didn't have an interesting print on December 20th, which is here. So this was Target's previous print. It caused a bounce briefly. It became support again, but eventually it broke down and didn't look back since. But now, it's not just the fact that there is a print, it's a combination of factors. Hmm. It's We are in a support area, we are super oversold. The reaction intraday on Friday was good. And by the way, this almost all of these are exchange prints, so they will appear in the volume on Friday. But you can imagine that the volume was something like this level, like at this level intraday, and then this huge print came in and spiked the volume. And this outside of earnings, this type of print is very very rare. Uh, I tried to look at a couple of names, but I couldn't find a significant sample size to say it's good or bad. Look at Dash with the 11 billion print. But back to Target. So Target for me looks incredibly good. You remember last time it was in the dumps like this, and it had a very similar behavior. Like we just that this didn't happen intraday. This was an intraday dump, but it looks kind of the same. And even if let's try to copy this just for the fun of it. it looks very similar as you can see, like bam, 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 dump, another leg down, some consolidation here, and then a huge move up. And the the huge move up is because it gets squeezed. Like when you get into the dumpster like this, on this level of dumpstering, any type of positive news or lack of bad news even, doesn't even have to be positive. Lack of good bad news is positive news, can get you to squeeze pretty hard. And we got all the way to the top of the range. I think we have a situation where the same thing can happen. Obviously, it will take some consolidation, but I expect, given how low it is, I think all the selling or most of the selling in target is done. And even if the market does another leg down, the downside is limited. I think the 100 area would hold. Obviously, it can poke below, like get to 95 something. Probably this, like this is the demand area from the COVID crash. Hmm. So all the way to 96, I think that's the most downside we can see in target because all the selling is done. Even if the market is red, it will no longer sell off and basically show relative strength relative to the rest of the market, even the market is down significantly. So given this, I think target is a great buy at this level. I'll high volume because it's not really that interesting, and all of them will have spikes in volume from this list. So yeah, target looks great here. Positioning wise, it's almost near the bottom. So another reason for I think it's a good buy. We have the AVU up bands. We are outside 2 standard deviation for AVU up. The price action was good on Friday, meaning it recovered and has a hammer candle. This might be different from this area here in that the consolidation is smaller, so it could have a move up much sooner, similar to what we saw in like Chevron, I think, like this. So I think it's much more likely to see something like this time than what we had last time, meaning a period of consolidation. Sorry, a period of consolidation going sideways and eventually earnings got it to move. I think this time the print will get has a much bigger chance to get it to move and to push higher. And an initial target will be this 141, the previous quarter print that we had. So top pick is target, and that's the reasoning. This is how it looks between quarters. We had this print here, which was relatively small, like 230 million, and now we have 2 billion. I think the cluster print was even bigger. Oh, I closed the cluster, I think. Anyway, continue. Then we have Merck, which has been going up a bit, but this one is a bit different. It looks kind of bearish. So Merck looked like this. It had a 14 print the previous quarter. Now it had a 1 print. But the problem with this is this distribution looking thing while it's curling up. Now I don't know what it will do. Meaning if it has a green candle on Friday on Monday, it changes the situation a bit if it recovers. But for now, this looks kind of bearish. We have like a pennant here. It closed below the trend line, so it's a bit iffy. And this distribution looking thing here, it's a bit concerning. Now, this being said, I think there's a good chance this has made a bottom and there's a good chance it will make a higher low. Like go here, see, going back. Yeah, this is the level where it should hold, or the range, like between 87 and 90. So what I think will end up happening is that this is actually a bullish print, but it will still kind of do this in a combo resistance here, something like this. So yeah, it's a resistance area, but I think this will prove to be bullish, but not immediately. As you saw in the introduction, uh, even though these prints come, they don't necessarily move the ticker instantly. There's a period of consolidation around that level, and once it goes through it in a decisive way, it goes higher and higher. So this is kind of what I think will happen with Merck. This, I think there's potential for a good buy in the around 90, ideally below 90, between 87 and 90. So if we go back in this area and we see that it becomes support, this is very good. And once that we get this move above, it will be a trend line break. It will be a move to the print. And this was a large print for Merck. How big was it? 4.29 billion. So a very large print. But like we saw in some of the other names, it takes a while for this to realize it, or it can take a while. Some move instantly, some can take a while. So I think, like we saw a couple of the names move above the print, like I'll show Tesla. Oh, sorry, Tesla. It went above and then went below, went above again, and eventually it does this that. So how I expect Merck is exactly like that, but the other way around. Like it first goes down, it consolidates here a while, then it eventually captures this level, and once this level is captured, it will surge up. So put it on the list, mark this level down. The very safe way to go about this is to wait for a breakout, like watch, wait for the confirmed higher low, and eventually once it has a candle with a close above this level, 93.11, uh, you can jump in, and I would expect to see a surge above this level. So this is how I see Merck behaving. And of course, I would like to see some prints, like once we go back to this like 52 print, I would like to see it get some buying and a couple of these prints with some positive price reaction. Like you see, every time we get one of these prints, we see a bearish candle, like a top wick candle, top wick candle, top wick candle. I'll show it here. Like every time it tries to go up, we get rejected, another rejection, another rejection, another rejection, and so on. So these are all bearish candles into trend line, not a very encouraging sign. So it needs to go back down, find some buyers, but eventually once it finds buyers and crosses this level and stabilizes above it again, I think it will surge up. Next one is Dash, which had the biggest print on Friday. Honestly, it's a bit confusing. I think it's kind of bearish, but it's like a delayed bearish. We are at this support level. I think this will play out something like this. Go back maybe to the high, but eventually when it loses this level, it will surge down. Dash has late earnings up on May 1st, so that's when I think we potentially see the breakdown. And I think Dash is a very good barometer of consumer strength. We saw since the pandemic that ordering food has become a huge thing. And if the consumer is cracking, rather than seeing something like FedEx or UPS that being the benchmarks for consumer spending, I think it's going to be more stuff like Dash, more stuff like Uber. So I really, really want to see the earnings. If the consumer is cracking and we're heading into a recession, I think we will see Dash crack. I think we will see Uber crack, and all these as a service companies that serve the consumer directly, instead of stuff like FedEx or UPS who have a lot of business side customers. So I think we will see. I don't think this is actionable quite yet. I think Dash will go sideways for a while. Could get a bit of a rejection, but again, don't maybe do something like this, go back up. But I think we will see consolidation, and this will actually resolve in a negative way once we get to earnings. It could obviously be some kind of insider thing, and we see them dump it ahead of times. But for me, Dash is bearish. We had this 16 print previously. It went up. Let's see, December 20th here. So this was the previous print. It was bullish. It went up. Now we are here, and it's not just this. It's just that we had a 9 print here, uh, a couple of smaller ones, and this was huge, like This will be something like a fund dumping their stake in Dash, and from with the idea that smart money knows what the fuck they're doing. Again, if you're smart money, or based on your understanding of smart money, would you be selling Target here? Probably not. Like, it's already in the dumpster. It's a low retest. It's a support from a technical perspective. Unless you have some insider info that, I don't know, Target invented a new form of cancer and is gonna release it in the world, you're not dumping it here. From a smart money perspective, you're probably loading up at this area. The same kind of logic here, unless you have some insider info, this is not an area where you would be buying Dash, given the technical aspect, like we're closer to the high than the low, we're into a resistance area, uh, we have macro data that says the economy is weakening. So why the fuck would you be buying Dash if all the macro data is saying a recession is coming, unless you, I don't know, again, you have some insider info that is not, or that their earnings are amazing or something like that. But I would expect sentiment towards Dash to be rather negative if we get a recession, and everyone thinks we're getting a recession. They're scared of inflation as well, but that doesn't mean we don't get a recession. So it's highly doubtful that this is a buy. But again, until we get a realization from earnings that this is the case, I don't think this is potential a breakdown, although it can be. But more like a sideways, go up, go down a bit, and eventually for earnings, we will get a cross down into this level and go at a minimum to the previous level from December, which is 171. If it's really bad, we can go down like crazy. So Dash is in the bearish phase. Then we have PFE, which is my second favorite print. The previous one was 13. We went nowhere. This one was huge. It was like 5 billion, no, 6 billion, 7 billion, something like that in total. And I really like this look. We've been consolidating in the lows, building energy. Nothing bad has happened lately. We're on the brink of a breakout, and I think we get to 31 at a minimum. Ideally, we do finally do this AVU uptake from the high. But again, I find it hard to believe that this is a sell from smart money. This looks more like a setup for a huge breakout that we will see very very soon. Again, could could take a while for it to happen. I don't think it's impossible to see a rejection here, like go back to 25, but we're at 26, 28. Going back to 25 is not that bad. And eventually, when we do get the breakout, it's going to be um, something substantial because we have a lot of consolidation. We've been going sideways and accumulating since December 2023, November 2023. So we've been stuck in this range for a while. It's about time we go to the top. If we get rejected, it will be here in this area between 30 and 41, and maybe we do this again. If it's still not ready to break out of this accumulation, but if it's ready to break out, we should be seeing this 35 potentially higher. I think it will go even higher than this if it's stable. But for now, uh, this print is huge, like I said, and I think it's a signal print that we will get a breakout very soon. Then we have Halliburton. I've been having my eyes on this for because of other reasons as well. There's a very strange setup here with we have stuff like oil servicing and equipment, which is Halliburton, and we have stuff like SOM. And I'll show in a second, which has now went up, but it had a print which I think is bearish. And we had a 6 print here for XOM. It went up a bit, and now I think this is more likely it's profit taking. And I think the money in energy will move from uh, producers into servicers. And that makes sense because if Trump's plan of drilling comes to reality, there will be a boom in servicers, the companies that provide the equipment and the infrastructure for drilling, and that money and the oil producers will lose money because price of oil goes down. So this is kind of the reasoning I see, and it's not just some, like it's other names as well. This look here with multiple prints at the top, price action was not negative, but I think we will see a top out relatively soon. Like again, not immediate danger, but something go to 118, which was also resistance area 120, but eventually break down and probably do more consolidation in this range here between the two prints. At the same time, again, it's not just Halliburton, is SLB, which is contract drilling stuff, which had a similar print. So we have HAL again. Let's look at HAL with the number one print, almost a billion. And we have SLB, which with a similar look. This is not at the bottom, but again, I had my eye on this one for a while, and looking forward to see a breakout here. And it looks like it's finally coming close to realizing it. Again, not immediate, but we could see another thing like this. But eventually, once this level is captured and we do have a breakout, we should see some upside very quickly. So COP was ConocoPhillips, also in the oil industry, energy, oil and gas production, and it has the same look as this was a Dodge print as well. That's has the same look as SOM. So we had this print here, and we have a number one print here after a big run up, probably some distribution. So this is on the list just because of that. It's also a horizontal resistance point. So kind of iffy here again with the Trump policy of getting oil prices down. This looks like a retest of the low of the previous breakdown low, and I honestly don't see it going above. And all the oil producers kind of look like this. This was Chevron. Let's look at Chevron. Did we get a print? Yeah, also got a print, also look distribution-y, meaning lots of prints in this area here. But candles are okay, but still this looks kind of iffy. So how I see this is more like we're in resistance area, mm, not immediate breakdown, but just go sideways a bit here in this area, maybe go a bit, but eventually once we go below this level and it becomes resistance, we will probably see this. So kind of fits the narrative. I I don't know for sure, obviously, and you should make up your own mind about it. But I like HAL, I like SLB for the potential for the breakout here, and same reasoning. These are other range bottoms into horizontal support into a view up. I don't see this really breaking down unless something is really wrong. Next, USB, US Bancorp, Bancorp. With the number on print 2.15 billion. I think the cluster was bigger. Into a view up, into long-term trend line from 2023 bottom. So generally looking pretty good. This one can obviously go higher directly, um, but again, a period of consolidation around these levels and eventually doing something like this uh, looks quite plausible. Let's jump anything? No. COP, I talked about it. Block. This one had one of the bigger prints, like 4 point something billion in total. I honestly don't really know how to interpret it that well. Had a number 9 print. I think there's some upside here up to the previous quarter print. Let's mark it down as well. Not a big fan because it kind of looks like we are into this resistance area. I think it's more chance that it's bearish. So this is kind of how I see it playing out. Obviously some going sideways here. I don't know how the sideways will look like, but potential as high as this, 1K, but seems I just don't see it doing it. Yeah, it's plausible. And go like this is the bullish version where we go sideways between these two levels. And the bearish version would be something like a bit of sideways, then break down and do another leg down. Uh, I I don't like it because of the way this looks like. It looks like it's a distribution range. We finally went below it. We are now back testing it. This is how it should look if it's bearish. Basically, we lost this horizontal level. Now we're back testing it, and getting rejected is the expected outcome after losing the distribution range. But maybe we do see this as well. Maybe this is a fake breakdown, but we're still not strong enough to break out. So most likely going to do like this. I'm gonna take it out is too uncertain. Okay, now a couple of Sony is a bearish one in my opinion. So we have dark pool prints all over this. We have number 2 print here, number 1 print here. So we've been having these dark pool prints, which I don't think are enough to justify um, to say they are bullish. Meaning, if all of this was buying, price would have went higher more. This is just momentum. And for some reason, it was kind of a safe haven, like we barely corrected, and it kept going higher. But we have a bearish divergence. We have all-time high resistance. So I think Sony will see a bigger correction very soon. This way too much selling here, or way too many prints that haven't moved price significantly to the upside. This is likely profit taking, and on the quarter end we saw well, this is not a lot of money, but it's the number one print for it. Rank one was 85 million. So I don't really like Sony here. I think we will get a bigger correction soon. This is the line in the sand where it can stop initially, like make it a double top. But I think this will break down as well. And we will go to this area here. Yeah, that's the level. Click it. So from 25 to 20, slightly below 20, something like this. So I think Sony will get instantly rejected, eventually maybe bounce here and eventually do this. So my target for Sony is 19. I think this is bearish and end of story. F. F had a 19 print on the previous quarter. Now some distribution, bit of bot deep buying here, but I don't like this. Like weak at the top, even if it went higher, and 58 print. Then we have a 60 print and rejection again. Then we have even lower and number one print. This looks kind of like shit. So we also have the macro context, which is pretty bad. Yeah, this is a oddity. Doesn't really matter that much. into resistance. It kind of broke down here, but not quite yet. It recovered after Trump delayed the tariffs. The tariffs are coming anyway. We are just 1 week away, a week and a couple of days. So I don't see how the car manufacturers will stay strong. I think they will go down in anticipation of the tariffs coming, and when the tariffs do come, they will break down completely. So should go to 7-ish in theory. It's all a gamble because maybe Trump delays the tariffs again or does an exemption for cars. I wouldn't play any of the car manufacturers because it's fully fucked up and completely random because of Trump. But my expectation is that the next week it will be bearish. I think this is selling. I don't see how this is buying. It had 1 billion here, and I think it's just cutting everything. But if it breaks out, it breaks out. If you want to follow it, go ahead. It's up to you. Could do something like this. Again, if Trump says no tariffs on cars, maybe this breaks out and goes higher, but who the fuck knows? So, in my opinion, this is bearish. I think the tariffs are coming as well. Maybe another delay, but that doesn't mean they're not coming eventually. And yeah, my target would be the 7 area for Ford, and maybe we see afterwards. Then we have Clean Spark. This is a crypto kind of name, something like this bullshit squeezy name. Had the number one print 304 million, and that's a lot. It's into support, lots of things to. This was a intraday sweep. Eventually, that became resistance, but it was very fucky. Like I think I actually bought some puts here, and it did this, and then it went lower. But this is a huge move. It was like 10% up, 8%. So it went up 8% before becoming super red and going lower. But in this area, I think it's a support. If you want to try some crypto shit, this is probably a good name to try it on because it will squeeze. One of those things that can go up 30-40% in a single day, like 29% here, 4% here, 23% here, 10, 12. You get the idea. It's one of the names that moves quickly and a lot. So if you want to try some crypto and gamble, this is a name that can probably work out. And given that it's a number one print in a very good area to buy from a technical perspective, this is likely buying and will probably go up and go up fast after when it eventually moves. Something like this. And yeah, go back to this 12 area is plausible. Teradata, one print as well, rank 1, 176 million, and a couple of extra change in there. What's 99 million, 80 million, blah, blah, blah. So again, a name that looks to be at a support area. It's unlikely to be selling because we're in the hole. Very similar to target in the setup here. Oops, not this one, the other one, this one. So yeah, could see a bit more downside, obviously, like go to 20 for a but eventually once it recaptures this level and goes up, we have this huge gap to fill up to 30. My God, probably this AVU up will continue going down and we will meet somewhere around here. So target would be this area. Let's actually put a horizontal line, the gap fill. Target is gap fill once it eventually decides it wants to go up. Floren, this looks interesting from both technical and this setup. So it had a number 4 print here, which caused the move up. but eventually it broke down. 4 print, which was December 20th, here, was bullish. It went up. Now we are below that print, but there were multiple prints in that area, as you can see here, this horizontal lines. And we are basically in a cluster of horizontal lines, and we had the number one print. We have multiple candles with down wicks, one, two, three, uh, and the number one print on the green candle, not the greenest one, but looks kind of okay. I'll show it here as well. So multiple rejections of the low, the rejections of the high are not that bad, and we have a pennant. So we need to look at this uh, on a very short time frame, meaning which way does it break out? If it breaks out to the upside, it goes higher. If it breaks down to the downside, then this goes lower, probably to 188. But my bias is bullish given how the price actions has happened in the last couple of days. Could also be a fake out, like we go from this print that we had on Friday to the number 4 print here, and if this becomes could do something like this and does more consolidation. But basically, uh, if it doesn't break down, eventually it will move higher in a significant way. So this one is take a look at this pennant, take the trade, beware of 230. If we get rejected at 230, if we don't get rejected at 230, I think this goes significantly higher. And target would be this 266 area. This was this reaction from the previous print. So we had a 10 print here, and now this looks distribution to me. We have a free print, and we had this one that took us higher, the number one print, and we have a horizontal range here that looks to have distribution in it. So in my opinion, we will get eventually a breakdown, but just like we had some sideways move here, I think we get some sideways move here, but this is bearish. Just like this, something like this, sideways, and eventually this. So Abbey is now bearish in my opinion. Service now. Accumulation, number 5 print in 827 billion. This was an 11 print and saw a bit of distribution here, tried to go up but went into selling, and then we gapped down below this level and kept going down. Now looks to be some accumulation in this area here. We are at the previous breakout point from the horizontal breakout, and I think this will hold here. So expectation is that we do something like this and eventually we go higher. Nike had a negative earnings reaction. I actually tried to buy this one even without knowing what happened, but didn't get filled. Covered and didn't get filled anyway. So number one print here, it went lower, went sideways. Now we're breaking down and we have another the number three print at the lows. So first of all, if this continues going higher, that will be the target area to get to and very likely to get rejected initially. I don't know. I like it from a technical perspective, but I want to see 65. Once this gets recaptured, it's gonna be huge. Like this level is the pivot to actually getting super bullish. But for now, I wouldn't be buying. Again, let's put the number 3 print here, which is this on the close. I want, I like it, but I want to get my entry around 65. So if does this, maybe does this again. Let's Given the momentum, I think this goes higher. Maybe goes to fill the gap, but then goes back here. And if we get an entry around 65, I think this is good. If not, so be it. And goes here, potentially gets rejected. And if it recaptures this, it can go a long way. So this is kind of my expectation. I want to get in at 65, otherwise I'm not interested. Cat. I like this because multiple accumulation time behaviors. This was initially the sixth print on the previous quarter. Tried to go, it went down a bit, but then recovered and went up, and then went down, and we're seeing some accumulation here. Kind of like it. I had this fake out here, but otherwise it's a support area. The previous print as well, December 6th. So I still expect bearish after April 2nd, but we have time to get quite the move until if we get the squeeze type market move up, we have time to do this. So I don't expect, and on the second leg down in the market, what you want to see is not make new lows. So any ticker that, let's assume we go up next week and we get that this type of squeeze move in the market, we go to SPY 500 or 590, almost 600, let's say. I would expect we get this type of move higher. And this is how much percentage wise, for example, we get 10%. That's not a lot. It's easily doable over 3-4 days. Then the second leg comes in from April 2nd. And this will be more like this. We get the second leg down here. And what you want to see in the tickers you want to be bullish on is that on the second leg down in the market, even if the market goes lower, these tickers should not go lower, should not make new lows. That's a relative strength type of behavior, and you want to see that in the tickers you select to be long. If they make new lows, then it's not that good. Also notice this trend line down here. So uh, I expect to move up to this level 366 from December relatively soon in the next market leg up. And then if we go down, this area should hold as support. And then maybe if the market comes the fuck down, we see another leg down and it goes to this 400 area and retests the high, potentially making like a sideways range here. So bullish cat, but beware the April correction, PM. Philip Morris has gone a long way up. I call this one when it was building in this consolidation range. Didn't expect it would go this high, but right now it looks quite bearish. Uh, Distribution number 3 print at the end. I think this is due a big correction. Like 131 should be the target. This maybe tries to go up higher again and eventually goes below this level and it does all of this. So bearish this one. HD is kind of good. 15 print, not that big. What is interesting about HD is features, Lumber's features. Generally, HD is positively correlated to lumber features. When lumber goes up, HD goes up as well. And when lumber goes down, HD goes down as well. It's not perfect, but generally holds as a correlation. See this, down, then up, then up, then down. And now the strange thing is lumber went up and HD is going down, which I think will correct relatively soon. We saw this with FCX as well, meaning copper goes up and went down, but it's getting corrected. And I think HD will soon go up as well because it's in a good place technical wise. Like this area here, oversold obviously. Uh, let's say this trend line is the midpoint of the range. Like if we do something like this, we're quite deviated relative to this. So even if should be going to this, maybe something like this for later on. This could be a possible path we see for it. The idea with this being the midpoint is that if this is the midpoint, we're quite deviated from the midpoint, and the move didn't start here. The move started here. So we had a sizable move down, and we need to mean revert a bit before we go lower. Uh, but this is quite plausible to see for HD before eventually going up in a more significant way. Once we go we have a short bounce, we go below a bit. Again, similar to what we saw the movements in the December move, but eventually this proves to be bullish, meaning a support area where demand happened, and we go up in a more significant way to this 416 area, previous top. Also looks like a head and shoulders kind of thing. Shoulders. We have the neckline here. I think we hit the not quite here. It's almost where I put it. So this would be the full head and shoulders target hit. But this is plausible as well. Also could do it the other way around, like go slightly lower, like this. I like HD in this area, like 340 should be the lowest it sees, and it's pretty good here. Amat, initial bullish reaction here. What did we get as print? For print, 1.1 billion. Pretty decent. I think Clock had a very good print as well. Like there were multiple semi-names, TXN, so in a good spot. Just look at the other stuff as well briefly. Clock print here, TXN print 1.1 billion. I think this will do well. Again, this is also a name where I think all the selling is done. And even if the market goes lower, this will show relative strength, meaning it will drop less than the market, maybe go to 140 here, basically hug the trend line and do something like this, even if the market goes lower, but eventually it will do this. This is my prediction for Amat here. First things first, Palantir is super overvalued, but look at this beautiful rounding bottom. Also looks like a sort of like a head and shoulders. If I go to lower time frame, it's gonna be easier to see, but I won't do that anyway. But basically this, this, I don't think it will make new highs, but going back to 100 is super plausible. Most I see it is something like this, so 110. Uh, and beware, like this is this top, lower high top, then it's all downhill from here. Palantir is basically Tesla. It's super overvalued just because it's affiliated with Thiel, who's affiliated with Trump. So I would expect we go to this 100, 110 area. It's still bullish, but eventually even this level will be lost. And when this level will be lost, it will be hell on earth. And I think the target is this gap area here. 41, 46. If you haven't gotten away from Palantir and haven't taken profit, highly recommended that on this leg up, you you at least take some profit and wait for lower prices. Probably it's a great company for the long term, but not at these prices. Expectation from me is go somewhere here, eventually lose this level and go back down. And when we lose this level, it's going to be all hell on earth. Just like Tesla, yeah. There. I'll show it to you. You can basically first leg down, second leg down, went up, then the lower high here, and then the full breakdown. And we're about to make the lower high, and then what comes next is the full breakdown to the 40 area, in my opinion. CRM dumpstered into support here as 267, previous high and other in this chart up. CRM. 6 print, 1.21 billion. We had number 2 print here, bit of buying on the way down, and a bit of stabilization. Uh, I think we go back to this area to do the horizontal range retest. This is also like a double top that has been fully realized. No, not fully. Yes, fully. If we say this is the breakdown point, going to 270, basically we reached our double bottom target. We have a trend line. So I would expect CRM does a recovery before potentially breaking down later. Shit. Here, and then maybe it breaks down afterwards, or does this. So yeah, GNG. The GNG is on the list with stuff that has gone up and now looks to be at the top. Distribution kind of looking thing here, 11 print 123 billion. So don't really like it that much, but it could take a while for it to break down. Something like this. Amgen, this had a print here, went up a lot, also the same kind of look, bit of distribution, 1.8 billion-ish. Pull back here. CVS, kind of the same thing. CVX is the top performer in SPX this year. And by the way, there's a reason why this is happening. So basically, this is healthcare and some staples, and they have been safe havens this year. So now it's about time that we get a bit of a rotation back into the rest of the market. And when this happens, year-to-date performance. And we look, Philip Morris is one of the top performers this year. Palantir, because of other reasons, where CVS 49%. And I think there's going to be a bit of profit taken in these or selling because 50% up on the year is quite a lot. And we're going to get rotation in, especially in tech. So I expect if we get that big move up in the market, the bear market rally, I expect that the top performers will kind of get profit taken, and then we move back into big tech a bit, and the rest of the market obviously as well. So that's kind of the reason why I think these are all a bit toppy in their behavior. It doesn't mean that we go back towards the lows. I think most of them will get higher lows, but they're in need of a pullback. They went up vertically. CVS being one of the best examples here. Since December, it went up almost in a straight line. It didn't pull back as well. It was a safe haven. But now that the market will go back into other names, or that's the theory at least, I think this will see a pullback, maybe go back to 60. Again, don't think this is like a going back to lows situation, but seeing something like 60 is quite plausible. Like potentially even 55. Let's say we go like this, rejected, something like this. Then had earnings. The market didn't like it, but recovered similar to Nike. And I actually wanted this to go a bit lower, but with that print coming in, it might not. Number three print, 524 billion. Yeah, million, sorry, not billion. It's on the trend line, so this might actually hold here and recover. I was bullish on this because of the various activity, so I think this will go up. What was the previous print? Number 5 print in December. So target will be this 138 area between the two prints. So it's, so this was had a one print on the December expiration. We had a move up. Now we have a pullback, and on this pullback we see a two print. Still think this is bullish. Like even though it gave up most of its gains and the guidance was bad, and this was because of bad guidance. The higher steel prices from HRC features has not come in yet, and I still think there's upside room, and I think it will move higher before it moves lower. So still bullish on steel. Finally, on it's had a large breakdown after this large consolidation. We met our target basically from the breakdown. Could potentially go as low as 39-ish to fill the gap here, but I don't think it will. I think it moves higher before it moves lower, uh, and quite oversold this one. But it is that it's super, super illiquid. It's the print, number 5 print, 366 billion. 65. That's a long way. The breakdown start, let's say here. First things first, it's a tag of the AVU up. So to see at least this, it's very, very oversold. So I think this is quite plausible in the short term. Getting big down like this, I don't think it's expected to do it on the first attempt. And maybe we get that 39 on a new leg down and eventually do this, move up, and finally go to 65. This seems plausible to me. Like we move up, we get rejected at AVU up and horizontal level 50 and psychological level 50. Then we push down again on the next leg down in the market and hit that 39 brief move below 40 right before earnings. And then earnings comes and we are super dumpstered, and it's very hard to get negative news when you are this dumpstered, and we get good news, it spikes up and we go to 65. Yeah, so these were my picks, quite a lot of them and quite tiring. Yeah, hope you guys had the patience to watch everything and follow the thought process, but that was it. Have a good one. Bye bye.